I am not bullish on the US bank system. In fact, I just sent out a tweet and ran some quick math on PacWest. PacWest has a market cap of less than 700 million right now.
Right.
It's got $44 billion of loans outstanding, assets. So you can calculate what that leverage is. It's about 63 times, okay, to its market cap. It's leveraged 63 times to its market cap. That basically means assets, if they change by more than 2% or 2 out of $100, it's over. It's already over for PacWest.
Greg has worked in the financial markets for over 30 years, mostly as a trader of high-yield credit. It is a founding stakeholder at 3iQ, one of the biggest Canadian digital asset managers, and it serves as validispower.com CFO and Bitcoin strategist at the moment. Greg claims that despite the bizarre times we are in, where central bankers tell us up is down, politicians spread untruths, and the states and capital institutions' purported strength is actually just a facade, the economy must continue to function. Finance must provide a profit. What is the core problem? It is arguable that the entire system of state-organized economic regulations is disintegrating. This has numerous negative effects, and prices and values are essentially meaningless. The main worry is that confidence is quickly eroding because the fiat economy is fundamentally a confidence engine. Trust has substituted for physical assets, but when trust goes, nothing is left. Returns on investment are disappearing, financial opportunities are being drowned by risk, and the real worry is that confidence is swiftly eroding. Now that the game is over, the state debt is overwhelming, and governments lack obvious solutions. Many of these experts have become disillusioned and are turning their focus to Bitcoin. When zombie nations threaten us with QD infinity, it is advisable to return to sound money's fundamentals.
Just based on economic indicators and the like, and the high likelihood that we will see some sort of credit contagion, I believe that at least one rate cut by December. So I'm hedging my bets quite a bit, but a lot of people say no rate cuts all year. I'm on the other side of that. I think there'll be a nominal rate cut and QE infinity. That's the more important thing, is that they open up the printing press again. We have gotten to a point where the debt spiral, the total global debt, and I won't just focus on the United States. It's not in isolation. The total global debt numbers are so large that the organic growth of the debt, because of the coupon, will exceed the will exceed the growth of global GDP to an extent that the interest expense makes the debt expand. The only way of solving that is by printing. There's lots of ways of the terminology, but all fiats debase, Paul. That is just the math, and they are relative. So they're all debasing, just the rate of decay is different between certain nations, depending on things like, obviously, interest rates and trade deficits. But they're all debasing. So we know that for sure. Some are debasing faster than others to enhance their competitiveness in a global market. It's called beggar thy neighbor. If you debase your currency more quickly, the currency makes your exports more attractive. And as you know, GDP is measured as follows. GDP equals consumption plus investment plus government spending plus net exports. So that net exports fourth term is quite it could be it's a term that they can play with a debasement of the currency, makes their exports more attractive. That being said, a CBDC is nothing more than a digital fiat. Yeah. So if you're doing it with analog fiat, you're going to do it with digital fiat. Yeah. Now, the digital fiat comes with an added bonus of surveillance and monitoring. And Mr. Foss, you spent your money on a parade, at a restaurant on a parade route that we don't agree with. So you were obviously attending that parade. We're going to censor your CBDC. Or let's take it to another extreme. Mr. Foss, you're a fat man. You're a fatso. We are going to limit your caloric intake because we've seen that you're shopping too much at a restaurant. All of these things are possible. Let's not go there. The reality is, though, whether it's an analog fiat or a digital fiat, they're They're all going down. I mean, let's not overthink things. Interest rates have been on a one-way decline, not for the last 14 years, but for the last 40 years. When I started trading in the late 80s, interest rates were double digits, okay?
Yep.
And essentially they've gone down, and when they go down, bond prices go up. As you know, that's the price-interest relationship in bonds. When the Bank for International Settlements created in the late 80s, early 90s, primarily, I guess, early 90s, the Bank for International Settlements capital guidelines, they were focused solely on credit risk, okay? Interest rate risk was not a huge focus for them. Banks are viewed to be lenders, and the largest risk in lending is credit risk, not interest rate risk, because most loans don't have the duration of long-dated treasury bonds. But you see, Paul, in that, long-dated treasury bonds had a capital requirement of 0, which means a bank could take your deposits and essentially lend to the U.S. Treasury, short-term deposits lending to 30-year treasury bonds. As long as interest rates go down, that 30-year bond goes up in price. Everything's hunky-dory until interest rates go up and that bond price goes down. And that's what we're living through right now. So, correct, they haven't measured for it from a capital allocation. Doesn't mean that risk didn't exist. It's just that the regulators were focused on other things. And by the way, they barely had enough capital to cover their credit risk exposure. The regulators didn't want to bring in interest rate risk exposure. It would have required all the banks to go out and raise more equity capital, dilute their shareholders, and cause, a ceiling on bank stocks. That was not their goal. The capital guidelines were largely, and I worked on the capital guidelines for Canada's largest bank, Royal Bank of Canada, in the early 90s. They were reverse engineered. The banks had a certain amount of capital, and the BIS regulator said, well, let's reverse engineer these credit guidelines so that you already keep the amount of capital that's on the bank's balance sheet. It's such a goofy system. It really is pathetic. And it was largely a response to the Latin American debt crisis in the late 80s that they brought these BIS capital guidelines in. Guess what? Now we're living the regional banking crisis, same problem. Though their equity capital has been carved because of interest rate risk, and we haven't even started contemplating the impacts of commercial real estate and real credit risk. It's not good. Interest expense on the debt that's going to become the largest item. What's the total government debt is over 30 trillion. Interest rates are 3%. That means that the interest expense portion is growing at over $1 trillion a year, right? 30 trillion times 3%, or 3.5%, which is the US 10-year rate. That's interest expense. Then you add on entitlements, and then you add on military spending. Biden's not going to cut the deficit by $3 trillion. It's mathematically impossible unless the USA wants to go into deep depression, because again, I'll throw out the equation of the day. GDP equals consumption plus investment plus G. What does G stand for? Government spending. Okay, cut that down. And all of a sudden, everything else, GDP contracts. And as a portion of your debt burden, you have a contraction in your GDP because of government spending. It's over that way. So either it's over because of the consumer, it's over because of net exports, it's over because of government spending. It's over, people. Like, I don't know why we're splitting hairs and trying to thread this needle. So the only solution is continue to print money. The deficit is out of control. You will never bring it back into control because we've lost that ability mathematically. And just a little comment on Secretary Yellen there. I mean, all due respect to a nice old lady, she's got to go. Grandma, you're not doing anybody any favors. Go out and start watering your petunias. Get somebody in there that actually is honest and credible and can actually do mathematics.
As June 1st approaches faster and faster, we have yet to see if any of the parties will bend. We sincerely hope you liked the video. Please remember to like us, subscribe, and enable notifications. Thank you so much for watching.